Okay, my beautiful friends, and yes, you're all beautiful, and I mean it. Here we go. This is my post-market wrap up on this Monday, January 25th, 2021. How about I'm laughing. The Nasdaq and the S&P 500 new all-time record highs. The Dow Jones Industrial Average fell under a little pressure towards the end of the day. I mean, there's a lot of buying going on here in this market. And I don't want to talk about that because I understand, I really do. There's a lot of people who are concerned about the market. Rightly so. There's no doubt about it. And there is a lot of talk. I mean, it's everywhere. All last week, today, about the stock market being in a bubble. Yes, let's clear that up right off the bat. Okay. The stock market is not just in a bubble. The stock market is in a mega bubble. But the super mega bubble is the debt market. Now, let's talk about that because people are writing to me all day. Greg, look at the 10-year yield. Greg, look at the 10-year yield. You're spot on. For those of you that are writing to me, Greg, look at the 10-year yield. I'm so happy to hear that because now I understand that I'm actually getting through to some of you. It's perfect. Yes, the 10-year yield dropped 1.04 is where the 10-year yield stands right now. We have fallen as of late a little bit. Now, if you happen to see the video I did this morning, I explained to you what I believe is causing this. Right off the bat, to me, the movement in the 10-year yield coming down a little bit, well, what does that mean to begin with? It means some cash is making its way into the debt market. When does that happen? Generally, you see cash go into the debt market when there's fear, when the market may be smelling something. Something is not good. You understand? You also tend to see a knee-jerk higher in the dollar when there's a little fear. We did see that today too. In my opinion, there is a little fear in the market right now. Why? It's very simple. We're going to hear from the Fed this week. If you pay attention to the market, pretty much whenever there's an announcement, a policy, monetary policy announcement from the Fed, the market gets a little, what's going to happen? What's going to happen? That's what it does. So you get this a little, pressure here on the 10-year yield, little knee-jerk higher in the dollar. But again, look what happened. Nasdaq and S&P 500, new record highs. Dow under a little bit of pressure. Okay, not much, pretty much flat. There's nothing going on here. But the market must continually, it's asinine, continually be reassured that the Federal Reserve will backstop the market and buy everything. That's what they've been doing. We heard from the European Central Bank today, the thing. It's not even human. Christine Lagarde. She's not human. I know there's an argument as to whether or not it's a he or a she. Does it really matter? It's a thing, okay? She, it, whatever thing it may be, is explaining. Again, their stance, the ECB, don't worry about it. More easy money for as far as the eye can see, and then beyond that. What does that tell you about what the Federal Reserve is about to announce this week? How about the same thing? The same exact thing. You're going to get, easy money promises forever. Forever. Okay, we're in an economic freefall. No end in sight here. We have not bottomed out whatsoever with regard to this market, economy. Market going to keep going higher as the economy free falls. As a matter of fact, the faster the economy goes down, the higher stocks will go. I've been explaining this to you for like years, and that's exactly the way it's been going here. And days like today, look, just look for opportunities. Add to positions that maybe are under a little bit of pressure, if you're in this market, if you're trading it, get out of positions that you think are going nowhere, reallocate funds. I mean, this, to me, I love doing this. It's fun to me. It's literally like a game. I'm sitting here clicking. Okay, I'm going to do this. Then I'm going to move money over here. I love it. It's all about opportunity. That's what this whole thing is. But again, yes, absolutely. The market is a mega bubble. A mega bubble built on the back of the largest bubble in the history of the world. And that mega bubble, the debt market super bubble, we haven't seen anything yet, people. Again, just last year, the Fed's balance sheet nearly doubled. It's an incredible thing to watch. What must be done. What happened under President Obama. What happened under President Trump. What is now happening and will continue to expand to an enormous degree under President Biden. It's not going to stop mass debt expansion. The truth of the matter is, they know it. Biden, who says he's going to level with you, will never level with you. He cannot tell you, and he will not tell you, that we cannot buy our way out of this. You cannot stimulate your way out of this. No amount of cash created out of thin air and dispersed to the public in any form, in any way, is going to stop the economy from free falling here. This is all by design. It's a game. The central banks shut down the economy globally via the scamdemic. Oh, the virus is very real. That's the truth. But the truth of the matter is, beyond that, is this is a deliberate act on the world to shut down the global economy, allow the central banks to inflate beyond anything we've ever seen before. And that's exactly what they're doing to finish what they started in 1913. I'm referring to the Federal Reserve to be the lender and buyer of last resort. And things you can't even dream about are going to be created to just borrow more cash into existence in exponential amounts. As a matter of fact, if you subscribe to the Trends Journal, as a matter of fact, I hope you do. I set that, me and Joe Salente set this up for you. Go to the Trends Journal, code SAVE 20%, and you can subscribe to the Trends Journal at a 20% discount. I think it's important. I really do. I write for the Trends Journal for free because I believe it's important. And check out my recent article. I think it's coming out tomorrow. It's really going to shed a lot of light on this. Anyway, so that's what's happening here, people. Debt expansion, debt acquisition on an unprecedented scale. Central banks working in concert. They're working together to inflate. And the higher their balance sheets go, the higher the stock market's going to go. 10-year yield today does not scare me at all. What will scare me is not so much seeing the 10-year yield come down incrementally. It's seeing the 10-year yield spike uncontrollably, because that's the meltdown. You have to understand, look, everyone, not you, those of you that are looking at the 10-year yield, again, it's right on my website, traderschoice.net, top of the second page. You can see it in real time. Also, I got everything set up there for you. Prices of precious metals, dollar index, Bitcoin, everything's there. It's all for free on my website. Take advantage of it. Okay, with that said, the incremental dropping of the 10-year yield doesn't scare me at all. What I'm waiting for, and it will occur, is an uncontrolled sell-off in the debt market, which will cause rates to spike rapidly in an uncontrolled fashion. Yes, we've seen a hell of a move with regard to the 10-year yield as of late come higher. We've seen the stock market go higher on the back of that. But there's going to be a moment here, and it's not just me saying it. I've probably been one of the first people out here anywhere to say it. Then you had Alan Greenspan saying this. You got big hedge fund managers saying the same thing. We're going to have an uncontrolled sell-off in the debt market. Rates are going to spike. When rates spike in a rapid fashion, it's going to put a lot of pressure on the stock market. Everything sells off. Cash is going to simply look for places to go. It's going to go into commodities. It's going to go into cryptocurrencies too. That's my opinion. You can have yours. Anyway, so that's the story with the market. Let's move forward. Cryptocurrencies, speaking of them, doing very well. Getting a bit higher today. Gold and silver fell under a little pressure. Why? Dollar got knee-jerked higher. A little bit of fear, trepidation because of the Federal Reserve. They have to reassure the market. The market must continually and repeatedly be reassured that the drugs will keep getting pumped in. And then you got the Biden administration here going to expand the debt way worse than Obama did, way worse than Trump did. You could probably take what Obama did, add what Trump did, and then you're going to see what Biden's going to do, and it's going to be even greater than that. So that should give you an example of where the debt is going to go, and as long as that mechanism stays in place, the market will go higher. Keep your eye on that 10-year yield, people, just like you're doing. Again, incremental drops. I'm not concerned about it, especially on a week like this when you got the Federal Reserve about to make some kind of announcement. And I can promise you there is no way possible that the Fed is not going to do anything else except inflate. I know there is some fear out here that, the Fed may decide to raise rates. It's not going to happen. I've called the Federal Reserve wrong one time. Once. Ever. So my record on the Federal Reserve is better than pretty much anybody else on the planet Earth. And I'm telling you, that's not going to happen. You're going to hear more easy money, promises to backstop the market, and the market's going to love it. It's interesting to see how the market reacts on Fed days. You get a lot of wild swings, a lot of volatility, like today. I mean, this market was all over the place. We were down pretty substantially at one point, but then it got a bit higher. It got bought up. New record highs for the NASDAQ, new record high for the S&P 500. So again, look at these things as opportunity. They're everywhere. This is an environment of abundant opportunities, and I mean abundant, in-your-face opportunities. If we understand where they're going with this, the mass debt expansion, well, you know what you should be doing: betting against the debt, becoming your own central bank, something I've said for over an entire decade. It won't change. That will never change. So anyway, that's where we're at. I hope this makes sense to you. And again, bravo to you if you're one of those that is watching the 10-year yield and was concerned today about seeing it drop a little bit. That's a good sign to me. You're understanding market dynamics. Understanding market dynamics is the key to this entire thing. And if you have my new book, A Not So Random Walk on Wall Street, also available from my website, you know this market better than probably, if you've read that book and you've gotten through it and understand it, you could probably right now apply for a job as a hedge fund manager. I'm certain of it. All right, look, I'm out of here. This guy loves you a lot. Please share the video. See you in the morning.